You've cracked the algorithm, built an audience, and the dashboard says you're finally generating revenue. But earning that money is only the first step. Most of us look at that screen balance and assume that cash is already ours. In reality, the platform holds complete custody of those funds. They dictate exactly when you get paid and how much of your balance you're actually allowed to access. That means your income is trapped behind standard 7 to 30-day hold periods. Worse, a single policy violation or a mistaken algorithmic flag can freeze your account instantly, cutting off your livelihood without warning. Generating revenue is useless if the system denies you the power to possess and control it. Securing that control means choosing the right payment gateway. You are forced to weigh two competing interests: the ease of delegated convenience against the security of sovereign autonomy. This chart maps how these payment methods compare. Setup friction is on the bottom axis, and creator control on the side. Native platform payouts land squarely in the bottom left. They take zero effort to set up, but offer the lowest control over your money. Up in the top right are non-custodial wallets. You own your private keys, meaning maximum liquidity and absolute control. But getting there requires significant technical setup. The question you have to answer is whether escaping those 30-day platform holds is worth taking on the technical burden of building your own financial architecture. Let's look closely at the default route, relying strictly on native ad revenue dashboards. The appeal is obvious. You link a bank account once, and the platform handles all the processing, tax forms, and distribution automatically. But that convenience costs you your autonomy. You are trusting a massive corporate entity to act as your personal escrow. If their algorithm incorrectly flags a video, or they update their payout policies overnight, your primary income stream halts. There is no appeal button that bypasses a frozen dashboard. Relying solely on platform payouts trades your long-term financial security for short-term operational convenience. Once you start directly billing brands or running your own independent sponsorships, you outgrow the dashboard. This requires moving to an upgraded fiat approach, processing transactions through independent PCI-compliant payment gateways. These systems support multi-currency accounts and require strict two-factor authentication, like a one-time passcode or biometric scan, which drastically cuts down on international payment fraud. Global banking regulations are actually forcing this standard. In India, for example, the central bank mandate makes two-factor authentication compulsory for all digital transactions starting in April 2026. This flowchart highlights the massive operational advantage of that mandate. Because strict authentication is required, the liability for an unauthorized transaction shifts away from you, the creator, and onto the banks. If a compliant platform has this fraud protection built in, you don't even need to purchase expensive external liability insurance for your contracts. Upgraded fiat systems ask you to deal with the daily friction of strict security protocols, but in exchange, they give you institutional-grade protection for your business. For global creators dealing with extreme currency fluctuations and high international payment friction, there is an even further step. The fully autonomous approach runs on non-custodial crypto wallets and blockchain-based payment rails. These systems use programmable smart escrows. Both parties agree to the terms, the funds are locked in code, and because blockchains are immutable, standard chargeback fraud is eliminated. Look at the settlement difference. A traditional wire on top pauses at clearinghouses for up to 30 days. The on-chain transaction below bypasses borders, holding money securely in escrow and releasing it instantly to your wallet when criteria are met. But this speed carries a severe trade-off. You are solely responsible for managing your private keys. If you lose them or expose them to a malicious link, your funds are gone permanently. There is no customer service line to call. On-chain systems deliver borderless, instant liquidity, provided you are willing to accept absolute zero-error responsibility for your own security. We've mapped out the entire landscape of modern creator finance, from automated dashboards to fully decentralized wallets. When you analyze these systems side by side, your security ceases to be a matter of password strength and becomes a question of who actually holds the keys. This matrix compares our three architectures. Notice how payout speeds accelerate and chargeback vulnerabilities drop as you move from traditional platforms down to on-chain wallets, while setup effort scales up in reverse. There is no universally perfect payment system. There is only the correct architectural match for the way you do business. To find your correct match, we need to apply these tools directly to your primary source of revenue. We'll start at the top of this decision tree with where the majority of your cash actually comes from. If you rely entirely on platform ad revenue, your strategy is pure defense. Enable mandatory two-factor authentication everywhere to force banking systems to absorb liability for any unauthorized access. If you are an independent artisan working directly with brands but want to avoid technical overhead, route your invoices through compliant fiat platforms to gain built-in transaction insurance. And if you are a high-volume creator losing margins to international chargebacks and currency conversion, transition to non-custodial wallets and secure your contracts with smart escrows. Creative freedom is an illusion if someone else holds your paycheck. You only achieve real independence when you build a system that keeps control of your livelihood exactly where it belongs, with you.